So this short video here will cover stakeholders, and we're going to be looking at two research papers which you have access to on Aula, and this will be on stakeholder engagement linked to sustainability, and that's the title of this paper is Capturing the Stakeholders' View in Sustainability, Reporting a Novel Approach. And the second paper we're going to be looking at is stakeholder in terms of corporate social responsibility. And this is to do with stakeholder management. And this is linked to theories of stakeholder management. So if we're looking at the first research paper in terms of engagement, engaging stakeholders is essential to carry out the materiality analysis by which organizations can identify their own more relevant sustainable aspects. Yet, on the other hand, the existing guidelines do not provide specific indications on how to get stakeholders actually engaged. Therefore, the purpose of the first paper was the development of a quantitative structured approach based on a multi-attribute group decision-making techniques to effectively and reliably support stakeholder engagement during materiality analysis in sustainability. Such concepts, are centered to the stakeholder theory based on which a company has to be considered as a network of stakeholders and social responsibility needs to be integrated within the business strategy. And several scholars have agreed to or the need to involve stakeholders in the definition of corporate strategy as well as the management of the company. In 1963, the Stanford Research Institute introduced the term stakeholder and referred to those groups without whose support the organization would cease to exist. Such a definition was successfully revised by Freeman, who defined a stakeholder as any group or individual who can affect or is affected by the firm's objective. Particularly relevant to the development of stakeholder theory were the studies carried out by Freeman, who stressed the importance of the strategic dimension of the relationships with stakeholders, and Donald and Peterson, who justified the essential content and significance of the theory and discussed it under a management perspective. So here, in terms of stakeholder engagement, they kind of identified five main initiation stages, which included the strategic thinking about engagement. It included the engagement analysis and planning, the maintenance and strengthening of the capacities needed to engage effectively, which includes the development of internal skills to address engagement, and the definition of actions based on the output of the engagement process and reviewing of the engagement process. So this approach has basically 6 steps. Steps 1 and 2 drive the organization respectively in pointing the aspects that would be considered an inclusion in the sustainability report and identifying the stakeholders to be engaged in a materiality analysis. Step 3 involves the choice and assessment of verbal labels to be used in evaluating sustainability aspects. Step 4, the individual judgments are aggregated according to. And step 5, and then step 6, the organization can identify material aspects. We're going to go into a little bit of these in a little bit more detail. So step 1, to identify sustainable aspects. At first the organization identifies all the aspects that could be included in a sustainability report. Step 2, identify stakeholders and prioritize them. The organization identifies its stakeholders so as to engage them in evaluating to what extent every sustainable aspect affects their assessments and decisions. Step 3, adopt and calibrate a set of verbal labels. Step 4, to assess the sustainability aspects. The organization on one hand and all stakeholders on the other. should assess every sustainability aspect by means of a label picked out from the whole set. Step 5. Combine the stakeholder assessments. A multi-attribute group decision-making methodology is proposed hereafter to aggregate the diverse opinions of the several stakeholders. And step 6. To determine the material aspects. To determine steps 4 and 5 are the coordinates representing the associated aspects as points in the materiality matrix. So if look overall in terms of the first paper, which you need to go into more detail yourself, this approach was tested by a sample of Italian small to medium enterprises concerned with sustainability issues operating in different sectors. And the empirical test has shown that the approach is relatively easy to be understood and adopted by practitioners. So this is something that you need to include in terms of how do you actually engage your stakeholders into your business. If we look at the second paper in terms of stakeholder management and theories of stakeholder management, this really links into stakeholders and the management of stakeholders and linking back to theories. So stakeholder theory is required to manage organizations in a highly complex and turbulent environment, as it gives a practical, efficient and effective and ethical way. Stakeholder theory is about creating more value at its core. But who should share the value that is created varies from different managers' points of views. So there are narrow models that focus on a small set of stakeholders like stakeholders or customers, while much larger groups of relevant stakeholders are covered in the broader models. Roberts and Mahoney 2004 found that 65% that were tested in this sample used the term stakeholder without actually making any reference to any stakeholder theory at all. So good stakeholder management is fundamental for any business to deliver enduring change. Stakeholder concept is basically a redefinition of the purpose of the organization. In a stakeholder management plan, different groups needs to be accommodated. In a stakeholder management plan, different groups needs to be accommodated. Stakeholder theory first found an expression in Ansoff, who defined the first objective to include, amongst others, the reconciliation of conflicting interests of various stakeholders. Over the years, a number of theories have been put forward in the academic literature to explain social reporting practices. Of course, these are most notable are stakeholder theory, legitimate theory, and political economic theory. Stakeholder theory describes an interrelationship among various actors involved in the firm and others an alternative purpose of the firm. Stakeholder management is intended to create methods to manage different groups and relationships. Organizations need to be better understand their stakeholders and how to strategically manage them. According to Donald and Peterson 1995, stakeholder theory differs from these and other theories in the firm in fundamental ways. Organization is an entity that accommodates numerous and diverse participants to accomplish multiple purposes, and some of them are not always entirely congruent. They classify the stakeholder theory in three different ways in terms of descriptive, normative, or instrumental. Descriptive, in terms of stakeholder theory, this relates to the descriptive aspect of the stakeholder theory is concerned with how managers and stakeholders actually behave and how they view their actions and their roles. It reflects and explains the past, the present, states of affairs of organizations and their stakeholders. Normative stakeholder theory, this is about the fundamental philosophy concepts involved and its connection forms the normative basis of stakeholder theory. It attempts to interpret the function of and offer guidance for the organization on the basis of some underlying moral or philosophical principles. And then you have instrumental stakeholder theory, and this theory stipulates how managers should act if they want to flavor and the work of their own interests. Their own interest is assumed as the interest of the organization, like profit maximization or maximization of shareholder value. According to Dodd 1932, GEC had identified four main groups which whom they had a great deal as shareholders, such as employees, customers, and the general public, and much more. Preston, 1990, credits Johnson & Johnson with identification of customers, employees, managers, and the general public in 1947. Similarly, Sears Company had ranked in 1950 the four main parties, which includes customers, employees, community, and stockholders. And then other authors already also talk about Mary Fuller in 1918, who sought a new social paradigm based on the cooperation rather than the competition and assets, that her ideas can deepen our understanding as they provide directions for implementing stakeholder management. Goodpasture identifies the three levels in which stakeholder theory can operate: the strategic level of achieving the company economic goals, but without any moral content, by taking into account the non-owner stakeholder interests; the multi-trustee approach that attributes to fiduciary responsibility to the company's managers on a moral level towards all of the stakeholders alike; and the new synthesis that distinguishes between certain fiduciary responsibilities towards owners and restricted non-fiduciary responsibilities towards other stakeholders. Stakeholder theory can be defended using a wide variety of theoretical perspectives. Donaldson, Dumfries, 1999, takes social contact theory as the basis for stakeholder relationship. Similarly, the logic that explains the relationship of managers and stockholders in economic theory. Jones, 1995, suggests the property right of contracts at the heart of stakeholder theory. Even Freeman, 1993, states that there remain six stakeholders, including stockholders, managers, employees, suppliers, customers, and the local community, who has, the right not to be treated as a means to an end. Thus, organizations need to balance their own needs and values with diverse and often conflicting needs of their different stakeholders. Stakeholder theory has also been defended using a wide variety of theoretical perspectives. According to corporate social responsibility scholars, companies are expected to have ethical and moral obligations to society, though not required. Stakeholder theorists have argued that though there are normative and ethical elements to stakeholder theory, these are separate and distinct and beyond its management social science applications. Two practical implications, summing up here, can be applied to as aforementioned company in terms of to ensure that when companies are thinking about their stakeholders, they should think in terms of the alignment of corporate social responsibility and plan for a long-term corporate social responsibility engagement and management of their stakeholders. So and this study suggests that corporate social responsibility and organizational value align is critical to be understood in relation to better aligned and incorporated with company values. So please remember to go and dig deeper into the two research papers to gain more information on these. Thank you.